How to read a COT report. Hello traders, this is Igor from FXigor YouTube channel, and today I have one very valuable video. Here I want just to answer one question. Can we predict the future asset price using the COT report? Can I know will the price of some asset, gold, US dollar, euro, British pound, anything, rise or decline? Can we know that using the COT report? And how we can read the COT report in the right way? Can we simplify all of that? Yes, we can. And please watch this video from the beginning to the end, and I hope that you'll get valuable information. So let me start from the beginning. What is the COT report? The COT, or Commitments of Traders report, is a weekly report released by regulatory bodies such as Commodity Futures Trading Commission. And this COT report provides information on the positions held by different types of traders in futures. So this is a very, very simple explanation. But let me answer another question, very important. When will COT report be released? The weekly reports for future-only commitments of traders and for the futures and options commitments of traders are released every Friday on 3:30 p.m. Eastern Time. So this is the moment when we can see the report. This is not so important. Why? Because all these weekly reports that we get, can be used only for some kind of long-term prediction. So it's not, I see a report on in the Monday something will happen. No. This is the long-term predictions. We're talking about not just weeks, we're talking about months. And this is very important to understand just right now, because we want to know some large positions. We want to know about something that can create a large bullish or bearish trend, where we can create a really maybe hundreds and thousands of pips profit. So COT report data. In COT report, categorizes traders into commercial traders, producers and hedgers, non-commercial traders such as large speculators, and non-reportable traders, small traders. As you know, just for the beginning, these two data, part of this data, commercial traders and non-commercial traders, are important for us. Then COT report data. What we need to watch on this report: long and short positions, net positions, changes in positions, and open interest. On the right side, you can see how that can look like if you use some excellent visual representation. Now, what is the COT report goal? Used by traders and analysts to understand, COT report can be used for market sentiment, to identify trends, and potentially anticipate price movements. So this is in theory. So these three goals you can read in books. You can read some college books. But I'm asking myself, what you can really get from COT report? And like I said, the COT report you need to download from the website. You have the CFTC.gov. You have the domain name, and here you can go, just press, and you will see something like this. This is the report that you will get from this organization, and I can tell you, it's really confused. You can be really confused when you read this report, because this table and all these numbers is something that people just say, oh, I don't understand this. This is very difficult. I don't know what to do. We have some changes. We have some contracts, a lot of numbers. So what I can do with this? And the information that you can take from this table are this: market participants, open interest, long and short positions, net positions, changes in positions, categorization of traders, historical data, market sentiment, contrarian indicator, and supplemental report. So all this data you can catch directly or indirectly from this table. But like I said, we have a lot of tables, a lot of data, do the machine learning methods. We can use this, but you, as an ordinary trader, can you use anything of this? Of course, you can see just in this report a couple important things, these changes in commitments. You can see the commercial right now and the open interest. You can watch non-commercial, but all these numbers are just numbers. How I can use this? So I will ask two important questions. These questions I got from theory. These questions you can get if you watch right now 100 YouTube videos about COT report. Because one group of YouTubers and one group of professors and one group of science research papers will tell you this: the COT report shows how committed the large institutionalists, no commercial traders are to long or short position within each currency pair. If traders are net short, the COT graph will show a negative position, and if they are net long, the COT graph will show a positive position. So one of the group of YouTubers and one group of the professors and science research experts watch non-commercial traders, long and short positions, not just for currency pairs, for gold, commodities, for stocks. It's not important. And they think if non-commercial traders number rise, the price will rise. If decline, price will decline. Is this true? This is the one question. Another question that we have is, can they predict the future price using the contrarian indicator? So if non-commercial traders are bullish or bearish, it is potentially reversal. So this is a total opposite statement. So if non-commercial traders rise, the price will decline. If non-commercial traders decline, the price will rise. So this is the completely different question. So one part of the YouTubers, professors, science research papers talking about this, that we can use COT report or contrarian indicator. So this is the something A or B. Is it like this or this? And it's for me stupidity. We cannot use this indicator in both ways. One of these two are true. And I ask myself and all of you, is this true? And I can tell that we create a classification model and we watch the changes in positions, and we ask this question. If we know changes in positions in COT report, can we predict the next 3 to 6 months asset price reversal? Believe or not, we created model and we tested a lot of charts and a lot of data. For example, last several decades. I just need to tell that some data are not like this because before COT report we got every 2 weeks. Now it's every week. It was different in the past, but we create all these models based on real data that we got. And I can say one thing. Yes, we can 81% up to 94% accuracy. And I can tell you this. The both assumptions, the both statements are not true. So I'm just repeat. The both statements are not true. We didn't success and we cannot predict the price using the rising on the bearish or bullish trend of non-commercial traders or commercial traders. So how we got these results? So I just want to tell you how you can do that, and you will see how that's simple. And our data, okay, some statements and some conclusions are a little bit complicated, but for you, for this video, I want to tell you, you can go to this website, TradingView.com/COT, and here you have a beautiful COT charts, and you can read from the charts and make conclusion without any classification model. And I will show you how you can do that. So you go to this website, you press, and you will get something like this. And you see the blue line are non-commercial traders. The gray line are commercial traders. The red line, others. So you watch this chart, and above this chart you have the US dollar chart. So how we can interpret the COT report, how we can get some conclusions, some help. I will show you. Look this. What you can do is very simple. On this chart you find all spots, all places on the chart when price between the commercial and non-commercial overlap. You see the cross between the commercial and non-commercial price or number of traders, and or you watch all spots and all places when the difference between the commercial and non-commercial are the highest. So you see, okay, I just need to tell you, we need one more line here because we have very high. Here we need a very line. In the 2017 we need one line. I forgot to put there. So here we are missing one line. The middle of the 2017, just I saw now. And when you do this, you can see just visually without any classification model, well, without any kind of machine learning or any, you just from the chart, you can see one thing. You can see reversal. So what is our statement is, if we have cross between the commercial non-commercial traders on the chart, or we have a very high difference between extreme difference. It's like 99 to 1%, 98 to 1%, so some high, very high on the chart. The highest high. This is the moments when we can expect reversal in the price, and you can see on the chart. For example, in 2015 year, you can see that we have a strong bullish trend of US dollar price, and just after the extremum we have the range during whole 2016. Then between the 2016 and 2017 year, we had, for example, overlap between the commercial non-commercial traders, and after that we got bullish trend. Then in the middle of 2017 the bearish trend, and you can see how this changed, how this is the almost for US dollar. I think that we can predict in the 90%, more than 90% of the success rate or accuracy that we will have a reversal in the next few months. And this kind of information is the very good. It's a very high accuracy, and you can do that alone. You just find this chart and you will see what will happen. And this is the beautiful thing. It's very simple. So what we can predict, we cannot predict the future price. What we can predict is that in next 3 to 6 months we can see reversal in price. And this kind of information is a very valuable, because all your trades and all your systems, you can adapt and use that kind of information. So let me see one example that how we can use this. For example, let me see for now. Right now, we are in the year 2023, and we can see the highest extremum. So we had commercial traders lowest low, and the highest high of non-commercial. It's a vertical red line on the chart right now. And you can see after 3 months, the bullish trend of US dollar stopped, and from that moment we started to have a strong bearish trend. Just to see on the chart what's happened. So we have a bullish trend. You see the circle. The circle is the same circle on this chart. And now you can see that right now we are in the bearish trend for US dollar, and because of that since October 2022. And you can see that Euro dollar, British pound dollar, Aussie dollar, Kiwi dollar, all this currency pair recover from the very low points in the autumn 2022. So right now we have a bullish trend, and the long-term chart you will see the bullish trend for all these currency pairs and the weak dollar. Of course, everything is connected. We have the political situation and interest rates increase in the American, and everything impacts, of course, on the price and everything. But what I want to tell you is that you can use the COT report to predict reversal, and you can do that very easily. It's not complicated, and I think that in the future video I will show you a couple COT report strategies you can watch, and just to see and to realize how this COT report can be used in the valuable and smart way. So this is it. I wish you a great day, and bye bye.